Hello guys, it's always a pleasure having you here again. And of course, we talk about the Forex market based on the majors and gold. What is happening in the market? This is the weekly market outlook. This is the weekly market forecast. So as we are looking at the instruments, if you are new to this channel, don't forget to hit the subscribe button and of course give this video a like and comment below with anything you would like us to do for you, right? So first of all, looking at the Euro USD from what we have right in front of us, of course, we've seen this extremely bearish move. A lot of people have seen this, but then we have been waiting for a decent pullback in order to get in the same direction, right? Somewhere yesterday, I mentioned that a good pullback to this area of about 1.17 will be ideal for shorts to take it back down and maybe even beyond this 1.1525 area of support, right? Yes, this would be a good one for me, and this is what I'm looking at personally. Here would be a bit too tight based on the risk to reward ratio. And don't forget, all we do here is based on our support and resistance. So this was the previous area of support, as you can see. And when we say area, it's not just the price point, even though we have a horizontal line there, it's an area. So we normally capture the area, and you could use a rectangle for that. So you can see this is an area of interest. And I like this area simply because it is an area of untested resistance. So that means that whether you like it or not, I'm sure you listen to me and you are trading, you are also waiting here. And some have already set pending orders here in order to jump in. And that is the Euro USD for you. Now quickly, let's flip through the other majors and gold. We have the cable. Yes, cable. I wish I could show you a screenshot I did talking about this area here. It was a good area. I can see price reacted to this area. And then we had a pin bar, a hammer, because you are trading price action, which would be your entry trigger, right? So you had this pin bar hammer here, and you can see it has dropped and given off a little amount of pips. So of course, you can easily manage it by closing partially, closing part of your trades, or at least reducing your stop loss and maybe doing a trailing stop. So this is where we should expect it to go. As you can see, we have a little support, resistance support in this area. And then finally, maybe this week, you could have it drop all the way to these lows here. So let's see what happens here. Well, if you got in at this point, then of course you should be able to tidy up your trade now. So this is a good one for those that might be in it. Just make sure you manage it appropriately, because trade management is also something that is very, very important and traders tend to overlook. Here is the Aussie. Here is Australian dollar, New Zealand dollar, and this looks a bit messy. If you look at it and it looks not clean enough, then of course it's one that you might want to leave out. And earlier we had a form of reverse head and shoulders, where this was the left shoulder, well, on the reverse, you know, to be the other, then this would have been the head, and then here, when it came back to retest this area here, right? So on the retest here, you can see it went long, it went up, and now presently at this area here of, excuse me, presently here at this area of flip zone, where you have here as resistance, support, and then you have here as resistance. I can see it's reacting to it, but who knows, it might as well break out, right? I can't see any visible price action candle I might want to pull the trigger with. But one thing also you need to be doing is checking on the dollar across board. Even if it's on the USD, Euro USD, rather, you have the USD that was strong. Same thing on the GBP USD. So if the USD is strong across board, then of course for this one, you should expect it to actually drop. So pay attention to this. If you actually place a trade here now, your stop loss should just be shy of this place. So that means that your entry will be here, stop loss here, and then expect final take profit at this lows. And this is definitely good for your risk to reward ratio. Don't forget your risk to reward ratio must be with respect to the fact that your reward is and will always be more than your risk. That should be a golden rule for everybody. And here's the Kiwi, right? Here's the New Zealand dollar, US dollar, which obviously moves similar to the Australian dollar, US dollar. Here, a form of support, that we have some forms of support in this area. You can see it acted here as resistance, but then it's stuck in the middle. It didn't quite get here. Excuse me. It didn't quite get to these lows here of support, but then it's here in the middle. If it approaches here, this might be a good place, or here might be a good place to look for shorts again. So when it gets there, how would you know that this level will hold, or how would you know this level would hold? It would be the reaction to that area. So just like a reaction that we had over here, where we had this candle's store, we should be expecting another store here, or maybe even here. And based on the store, look for the price action for your entry trigger to sell, right? So that's how you're going to be trading. It's going to be in this fashion. You mark out your areas of interest based on the trend, because the trend usually is your friend and it's advisable to follow the trend. Otherwise, you know what you're looking for if you're trying to go against the trend, against the market. And after marking out your areas of interest, wait for price to get there. Look at the reaction to the area. Look at how the candles form in that area, and then look for your entry trigger. That's all. Here's the dollar yen, and the dollar yen, or rather the dollar Swiss, seems to be stuck between these two levels for now. And if you look at the two levels that we marked out, you will be able to see a form of resistance, and even though it breached out here, it still acted as support and support. Then here too, little resistance. Then you could call this like probably a little false breakout over there, and then it's in between. So that means that you either wait for price to get here to do something, or you wait for price to get here, or maybe even a breakout, retest, and then push higher, and then maybe a breakout to the downside here, retest, and then push lower. So this dollar Swiss, all you have to do is to wait patiently. Yes, the business of forex trading requires a lot of patience, right? So good. Speaking of patience, you can see that this dollar yen, we had a strong, very strong vertical move yesterday. From the start of the Asian session, from Sydney all the way down to New York, there was no slowing down, and it's always best not to fight vertical moves. As we have a move such as this, we have this area that is yet to be tested as support. So maybe, I don't know, maybe we could have a nice clean pullback to this area, or maybe it could even range a bit before making a decision to come back to this area 112 of support, or maybe even push higher. We have an area at 114 on the weekly time frame, which should act as an area of supply. So pay attention to this dollar yen, and if you want to know the driving factor here, it is the yen. Checking across board for all the other yens, you can go and check the Australian dollar, Japanese yen, New Zealand dollar, Japanese yen, Canadian dollar, Japanese yen, the Euro, Japanese yen, and so on. Then you'll notice that this move was very much similar across board, and that's how you'll be able to check to know which one is stronger than the other. In this case, of course, you know the yen here is weak, right? Is weak going up against every other currency, right? The dollar card here, for the dollar card, we've been having crude oil that has gotten to new highs of $80 per barrel. So naturally, we should have the dollar card drop some more. But before it drops, we're expecting a better pullback to this area for us to shoot down, or even better, one here for us to shoot down. Don't forget, the higher it pulls back, the better for us based on the risk to reward ratio. But I'm not liking this loony. I'm not liking this dollar card much, because overall it is on a sideways market. It's looking more on the sideways over here, and it just broke out of this range here, this consolidation. So this will now be a good one for us to drop, look for shots when it pulls back better. So I'm going to keep an eye on this. We're going to keep an eye on all the majors and gold. Speaking of gold, this is one that I might not just keep an eye on for now, right? Why? Because you notice that gold likes to do well. Of recent, gold has been doing this. It moves and then moves into a range, moves into a range, and you can see this is what it has been doing. We had a range here. Let me just box this here, and then we had the breakout here, and then now we have this other range here. So what are we expecting? It's doing a sort of drop, then a range, and then a drop, and then a range, and then a drop, and then a range. So now it seems to be ranging. So don't be surprised if we have like a drop here, and then a range, and then a drop. But whatever is going to happen, always wait for the proper breakout and then a possible pullback to that area, right, as a form of retest. Because if you're trying to trade inside this consolidation, I repeat, if you're trying to trade inside this consolidation, then of course you are doing a whole lot of battle with the buyers or sellers, depending on what you are trying to do. So I would always advise that the best thing for you to do is to wait for a proper breakout, and then you now, wait for a pullback. Don't enter aggressively on the supposed breakout, because it could also be a fake out known as a false break, right? So always know what you're going to be doing in the market before it actually does its thing. So we as traders, we are more or less following the market. We wait for price to act, and then we react after, right? So with that said, we've talked about the majors. Excuse me. With that said, we've talked about the majors and also gold. So for you to learn some more, yes, we now have some scheduled weekend webinars, and of course you'll be able to get the link, the Zoom link, in the description below. So pay attention. The Zoom link will be dropped in the description below, that you can join us on Sundays, right, to learn more about the market, where you can even ask questions, and then we'll see what we can do for you. And if you want to have a discussion, you can book a call. The link also to book a call is in the description below. And don't forget, below you can also comment if you want us to do a particular video, right? I know there's a video I'm supposed to do for someone based on price action, and we will get to that shortly. If you look at what we have here, all these candles are price action, and of course we will talk about price action based on how the market is moving, based on the candles, because the candles is what is representing the what? The candle is what is representing the price action. So don't worry, we have that video queued up, and then we'll use that to explain, and then everybody can learn from that, right? So if you have any other feedback or suggestions, any video you would like to see, then do of course comment right below, and then let's see what we can do for you. Don't forget to smash the like button, and if you're new to this channel, the CSAFOREX channel, where we talk about the majors and gold, and of course sometimes we talk about the Bitcoin for the crypto traders, right? Don't forget to also hit the subscribe button and turn on the notification to get alerted when next we drop a new video. Okay, so I want to say thank you. It has indeed been a pleasure. Enjoy the rest of your day. Yes. God bless. Goodbye.